Welcome back to the Daily Crypto Roundup. Today's market is not moving on hype alone. It is reacting to a combination of macro policy shifts, liquidity signals, bearish warnings, and deeper structural changes inside the crypto ecosystem. We have the Supreme Court striking down Donald Trump's tariffs, altcoins like Dogecoin, Shiba Inu, and XRP pushing higher, Schiff warning of an 84% Bitcoin crash, XRP reserves on Binance dropping by 200 million tokens, and fresh debate about blockchain entering political campaign finance systems. This is one of those days where crypto clearly intersects with politics, macroeconomics, and institutional power structures. So let's break it down carefully and connect the dots properly. Here are your latest top 10 crypto prices as of right now, and this price update is sponsored by Kraken, one of the most trusted and secure crypto exchanges in the world. Bitcoin is trading at $67,758. Ethereum is at $1,967.59. XRP is holding at $1.43. Solana is trading at $84.98. BNB is at $625.68. Cardano is at 28 cents. Dogecoin is at 10 cents. Chainlink is at $8.87, and Polygon is trading at 10 cents depending on venue liquidity. If you're looking to trade these markets, manage risk properly, or position for the next move, Kraken offers deep liquidity, strong security infrastructure, and competitive fees. You can get started using the official link below and support the show at the same time. Now let's do our XRP giveaway shoutout, because this is about rewarding the community that shows up every single day. Congratulations to King John III, you've won 10 XRP, and Moonhead, you've won 5 XRP. Both of you will be contacted so we can sort the wallet details and get that sent over. This is exactly why we tell you to comment, stay engaged, and be part of the conversation, because the more active you are, the more chances you have to win. We're building this show with you, and the XRP giveaways are just one way we give back to the loyal listeners who support the movement. If you want to be next, make sure you're commenting on every episode, sharing your thoughts on the market, and staying active in the community. Engagement matters, and we see it. Keep showing up, keep stacking, and who knows, your name could be called next. The first major catalyst today is the United States Supreme Court decision striking down Donald Trump's sweeping global tariffs. The court ruled that the former president overstepped his authority under the International Emergency Economic Powers Act, which effectively removed a layer of policy uncertainty from global markets. Investors interpreted the ruling as reducing trade friction and lowering the probability of prolonged economic disruption. When uncertainty drops, risk appetite tends to increase, and crypto has been trading as a risk-sensitive asset for several cycles now. Now the question you may be asking, why does a tariff ruling matter to Bitcoin or Ethereum in practical terms? Tariffs create inflationary pressures, distort supply chains, and introduce unpredictability into global commerce. When those risks are reduced, investors recalibrate growth expectations and reassess the probability of interest rate adjustments. If markets believe economic friction is easing, the perceived need for aggressive monetary tightening diminishes. That shift in expectations directly impacts liquidity forecasts, and liquidity is the oxygen of crypto markets. Earlier macro data showed weak GDP growth combined with stubborn inflation, which created concern about stagflationary conditions. Stagflation is particularly toxic because it limits central bank flexibility while growth slows. However, the Supreme Court decision gave markets a relief valve, allowing traders to reassess the trajectory of economic pressure. Even though Bitcoin initially spiked and then retraced slightly, the broader tone shifted from defensive positioning to cautious optimism. The total crypto market capitalization moved back toward the $2.3 trillion region, which signals stability rather than capitulation. Now let's transition into the altcoin story, because this is where momentum becomes visible. Dogecoin, Shiba Inu, and XRP are among the top movers, and this is not random speculation. Historically, when Bitcoin consolidates after a macro shock and does not break down, capital rotates into higher beta assets. Traders begin searching for amplified returns once they sense that systemic collapse is unlikely. That rotation dynamic appears to be playing out again today. Dogecoin and Shiba Inu operate primarily on sentiment and momentum, and both benefit when risk appetite returns. Retail traders often deploy capital into meme coins when volatility stabilizes in Bitcoin. Momentum feeds itself quickly in these tokens because liquidity depth is thinner compared to Bitcoin. Once green candles appear, social amplification accelerates flows. This is a classic crypto pattern rather than a structural fundamental shift. XRP's rally, however, has an additional layer of on-chain support. Binance reserves for XRP have dropped by roughly 200 million tokens over the past 10 days, which is a measurable decline in exchange supply. The exchange supply ratio moved from approximately 0.027 down to 0.025, indicating that holders are withdrawing tokens. When assets leave centralized exchanges, they are often moved into private wallets, suggesting longer holding intentions rather than immediate liquidation plans. Exchange outflows reduce available sell-side liquidity on order books, which can create supply compression effects. When demand increases while exchange supply decreases, price movements can accelerate more rapidly. This does not guarantee a rally, but it shifts the balance between available supply and speculative demand. XRP is currently trading with strong daily volume, so the combination of liquidity tightening and macro-driven risk appetite creates favorable short-term conditions. That dynamic is one reason XRP is outperforming today. Now let's address the bearish counterweight in today's narrative cycle, which comes from Peter Schiff. Schiff is urging investors to sell Bitcoin, warning that if price breaks below the $50,000 region, it could fall toward $20,000. He frames this as an 84% collapse from the all-time high and argues that leverage and institutional exposure amplify downside risk. His message is consistent with his long-standing skepticism toward Bitcoin. Schiff's critique centers on structural fragility, particularly the growth of derivatives and institutional participation. He argues that the larger Bitcoin becomes within traditional finance, the more vulnerable it is to cascading liquidations. There is some theoretical validity to the leverage argument because interconnected systems can amplify stress. However, institutional adoption also brings regulatory clarity, custody infrastructure, and broader investor participation, which can strengthen resilience over longer cycles. Bitcoin's historical volatility includes drawdowns exceeding 70%, so severe corrections are not unprecedented. The difference today is that Bitcoin now sits inside regulated exchange-traded products and corporate treasury allocations. That integration cuts both ways, increasing macro correlation, but also increasing legitimacy. Markets are not currently behaving as though an 84% collapse is imminent, but volatility always remains part of the asset class. Traders should understand risk scenarios without assuming inevitability. Beyond price action, another story today highlights blockchain technology being proposed as a modernization tool for political campaign financing. The argument is that blockchain could provide real-time transparency for campaign donations rather than delayed quarterly reporting. In theory, an on-chain system could allow citizens to track funding flows as they occur. That proposal reflects a broader theme of crypto integrating into institutional systems rather than operating outside them. At the same time, crypto companies have already spent substantial amounts influencing political processes through political action committees. This means blockchain is not merely a theoretical transparency tool, but also part of the political funding ecosystem. When crypto intersects with governance, regulation, and elections, the stakes rise significantly. Policy decisions begin to influence asset valuations more directly. The boundary between technology and political economy continues to blur. When you connect all of today's developments, a larger pattern emerges. The Supreme Court ruling reduced trade uncertainty and improved macro sentiment. Altcoins rallied as liquidity expectations stabilized and rotation flows returned. XRP exchange reserves declined, tightening supply at the same time demand increased. Meanwhile, Critics like Schiff injected bearish narrative pressure into the market. This combination demonstrates the reflexive nature of crypto markets in 2026. Headlines move sentiment. Sentiment moves liquidity, and liquidity moves price. Political decisions now influence digital asset flows in near real time. Exchange data functions like commodity inventory reports, shaping trader expectations. Narrative warfare has become a core market variable. Short term, the market appears stable rather than fragile. Bitcoin is holding support rather than breaking down, and altcoins are participating in upside rotation. XRP's exchange outflows provide a structural data point worth monitoring in the coming weeks. Meme coins are benefiting from renewed speculative appetite. None of this guarantees continuation, but it reflects current positioning rather than panic. Medium term, liquidity expectations remain the dominant variable. If macro data weakens further and rate cut probabilities increase, crypto could see sustained upside pressure. If inflation reaccelerates or new geopolitical shocks emerge, volatility could spike again. Traders should monitor macro indicators as closely as technical charts. Crypto is no longer insulated from traditional economic forces. The broader takeaway from today is that crypto has fully merged with macro and political dynamics. Supreme Court rulings now move Bitcoin. Exchange supply metrics influence XRP momentum. Political funding debates involve blockchain infrastructure. Bearish macro analysts and bullish crypto advocates compete for narrative control in real time. That is the environment we are operating in. It is more complex than early cycle hype markets, but it is also more integrated into global financial systems. Understanding these interconnected layers gives you an edge over purely technical traders. Crypto is no longer just about code and charts. It is about policy, liquidity, and perception. Not financial advice, but strategic awareness matters more than ever. Drop your thoughts in the comments, smash like, follow, and we will see you at the top.